How's it, guys? Welcome back to FX Rhapsody. Today we're looking at two currency pairs. It's going to be the British pound, Japanese yen, and then we're also going to be looking at the British pound, US dollar. Before we hit the charts, for those of you that's new to my channel, go visit my website on the bottom left corner over here. You can also find the link in the description where you will find some nice trading material that you can read. There is lots of previous analysis that you can watch. For those of you that's new to trading, there's some nice video categories that you can go through, and then also a resource tab where you can find resources to download, which is one of them will be the COT reports, which we will be looking at in our analysis, and then also the preferred brokers tab, guys. These guys are absolutely brilliant when it comes to having a reliable broker behind your side that you can trust. Okay, so let us hit the chart. So we're looking at the British pound, Japanese yen first. What we can see is on the 4-hour time frame, again, price not going anywhere this week, just kind of staying in this ranging area. This is, I'm only talking about this week, guys. For those of you that I've had so many comments and guys saying that, price is not ranging or in consolidation, but I mean, for me, that is ranging in this whole week. Price is just doing up and down in that area. I'm just gonna shoot down to the COT reports quickly. So we're looking at the Japanese yen. Japanese yen price is, you can see it's getting a little bit stronger in the market. I mean, the previous week we had longs being opened, shorts being closed, and then this week again shorts being closed, but longs being closed and shorts, but more shorts being closed. So price is slightly going up a little bit more, but then when you look at the British pound, very similar effect where you can see the British pound getting stronger. So what happens is, if the British pound is getting stronger, the Japanese yen is getting stronger. So this is why we have this effect in the market. But if we just zoom in a little bit, okay, we're just focusing on this area. Okay, so basically what happened this week, we can see that, I'm just going to close that. We can see that this area in the market, there was a little bit of liquidity that was being taken out. So we have got, I'm just going to make that a different color, black. So we had a high in the market before the market opened this week. So price just tapping into that high and then price shooting down again. And I will show you some nice entries. But what I want to show you is just this little area here. Okay, so we have got this support area in the market. So I'm just going to make it a little bit thicker, and I want to keep it there. There we go. So I want to keep it there, and I'm just going to make that a different color. Let's make it blue. Okay, so we have got the support in the area because after price broke this area, price went down and it came to an area over here. So I'm just going to take that out. So let us go down to the hour time frame, and then we can look at what happened. Okay, so we have got the support area in the bottom there, as you can see. Price just tapping into that area. On an hourly time frame, it obviously looks a little bit different with a candle formation. But so we have got, and what happened this week is this over here. So this is a high that was broken. Okay, just going to change this, not the settings that I want. There and there. So we have got this area in the market that price broke, right? So after that high that was taken out, price just a little bit consolidated a little bit, and then price shot down. It created a nice little bearish candle over here, a nice big bearish candle, and then price came up again. So we take out a Fibonacci and we take it from this high and we take it to that low. So you had a swing high at the top here. You can take it from there, but a nice little swing high. We had a swing low, and then we had a bullish candle that pushed up into the 62% area, like there, as you can see. So that's the area between the 62% and 79%. And I'm just gonna do that just to show you. That's it. Take this out. So otherwise it gets a little bit confusing with all these little lines. So as you can see, price just tapped in there, and that is a nice little entry for you to sell down to that area. So where's your exit point? Because that's a sell entry. Where's the exit point? The exit point is obviously this support area that was created on the 4-hour time frame, the blue highlighted. And as you can see, price just went down, came up again, and eventually it went down again to tap that support area. First target would have always, excuse me, obviously been this nice little fair value gap that was created in the market, as you can see. As price went up, there we go. As price went up, okay, it created a fair value gap, as we can see over here. That fair value gap was never touched or retested. So price went up again, like I said, broke that or tapped into liquidity up there. You took your sell position, okay, that's the sell position that you took. Price went down. First target area is obviously price gets drawn to the fair value gap areas in the market, and that's always the case, guys. Then price went up again, and then it went and tapped or just went past that support area and not closing on. If you look at the 4-hour time frame, always look at multiple time frames, guys. Don't just focus on one time frame. And as you can see, price went in, just made a little dip below that, came back, and on a 4-hour time frame, you will see the price just closed above that area in the market, and then price started shooting up again. So we were looking at, you know, because of that whole consolidation affecting the market, I'm going to look at this week for this currency pair. I'm just going to focus on over here. So that, make it a little bit longer. Okay, that's going to be my first section here. Okay, I'm just going to look at that high, and I'm going to be looking at this low. So I want to see price breaking obviously above it or below it, just to see what, you know, after any break of these two lines, I'm just going to react to the market and see if there's any fair value gaps that's getting created that price retraces back to, or I use my Fibonacci tool and then I trade the retracement back to the 62% and then catch it going forward. Okay, so let's move on to the next currency pair, which will be the British pound, US dollar, this one. There we go. We're going to be starting on the 4-hour time frame. Okay, so 4-hour, excuse me guys, before, yeah, no, let's carry on. I wanted to show you an entry on the 15 minutes, but you know, that's for another day. Let's go to the 4-hour time frame on the British pound, US dollar. I'm not going to go back to the COT reports because we did already look at the British pound, you know, on the COT reports, but you know, you guys can just download it for free and just go look yourself. 4-hour time frame USD, and again, very similar situation. Okay, and as you can see, again, that, guys, for me, it's ranging in the market. It's just prices consolidating. It's actually not going anywhere on a high time frame. It's just going up and down and just ranging. Very similar to the British pound, Japanese yen. And again, look at this. Very similar situation that was created in the market here as well. So we have got this area in the market, that little or that support area, and price coming and tapping into that support area again. Okay, so I'm just going to do that. And again, just for reference, I'm just going to keep it there. Let's have a look if it shows up on the one. There we go. So that's going to be my area that I'm going to be looking at now in the 1-hour time frame. So going back to the 1 hour, okay, zooming out. So what happened this week? Okay, what happened? Zooming in. So we had in the market, we had a high starting off. Okay, this was a previous high that was in the market. I'm just going to leave it that nice big black color so we can see. And as you can see, as price started this week, price just tapped into that area. Okay, so it took out that high, and then price started dropping down. Okay, price started dropping down, and then it retraced back. So it created a high in the market. And as you can see, there was a low over here. Price just tapping into that low area, and then it retraced. So you take your Fibonacci tool for a nice little entry from that swing high to that swing low. Okay, swing high, swing low. There's nothing difficult about this. It's literally, it's a swing high in the market, price tapping into that liquidity, swing low, again tapping into that buy opportunity or buy liquidity that's lying at the bottom there, tapping into that, retracing back 62%. It's just sitting on your hands and waiting for these opportunities, guys, and not jumping into any other trades or just any, you know, any possible trades that's you think it's in the market. Just wait for your setups. So there, nice little sell opportunity, pushing down, And where's your exit area? Again, 4-hour time frame, I drew this nice little support area over here, very similar to the British pound Japanese yen, and price just tapping into that area. And that's where you exit your area or exit your trades. Look at this. So that's just, and we talked about this last week. This year, we're going to be focusing on just getting pips in the bank. Okay, 123, 124, 124 pips. You know, don't forget, don't worry about the money that you're going to make. Focus on the amount of pips that you're going to do. So you can trade this, very small lot sizes, very small contracts, and just see how your money is going to start growing. So if you practice, practice this. Just look at your structures in the market. Use your Fibonacci tool, use your fair value gaps, and just practice this the whole time. And just start off slow, small contracts, small lot sizes, guys. And from there on, if you get comfortable, you can just up it a little bit, and then you will see the money coming. So after that move downwards, okay, as we can see that push downwards, we had a nice big bullish engulfing candle. And that is just, for me, it's just a sign of, bulls taking over a little bit. And then we had a nice little downwards movement to this area. So what happens is you take your Fibonacci again, you have a swing high, a swing low over here to the swing high area, okay? So swing low, swing high, price consolidating a little bit, pushing down into your 62% area where you will take a buy opportunity, okay? Buy opportunity, and you can see price just pushing up again, okay? It's as simple as that, guys. Nothing difficult about it, okay? So a lot of guys will see the consolidation in a higher time frame and they're like, okay, the price is actually not going anywhere, so it's not worth trading and all of that, okay? But again, you had 140 pips. It's another 124 pips. So it's over 200 pips that you could have caught in your consolidation section, okay? So it's easy for the picking. It's right there, guys. Nothing difficult about trading. You must simplify it. Don't use too many indicators. Don't draw too many lines. Don't make your charts so messy. That's the word I'm looking for. Don't make it too messy, because then you're going to start losing it. Okay, so we're going to be focusing on two areas in the market. I'm just going to look at these two. Okay, that's the two areas that I'm going to be focusing on. Yes, there is a little bit of a high there, but I mean, I'm focusing more on these two. Okay, you can see price just getting closer. So once price breaks above it or below it, I will react to what the market gives me, exactly the way I showed you just now on the charts. Using Fibonacci, using fair value gaps, just looking at those big structures in the market. So guys, that's all from my side. I hope you enjoyed this analysis, and if you did, don't forget to hit that like button, hit the subscribe button, notification bell. Show me some love by hitting that super thanks, and I will definitely be making some more videos this weekend. So guys, I hope you're staying safe. I hope you've been having a wonderful weekend, and happy trading, guys.